Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, today we're going to talk about the bubble watch. This is the, all the people out there saying the market's going to fall. And we have data here that's notice of default and notice of trustee sale. Mm-hmm. Okay. Before we put the slides up, because we've got 3 slides to put up, let's just talk in general real quick about the process. Okay, so let's say somebody stops making a mortgage payment. They just say, I'm not going to make the mortgage payment, whatever. What's the soonest the NOD can be filed?
90 days.
90 days. Okay, 90 days happens. And then 28 days, that's the magic number. After the notice of default, they can do a notice of trustee sale. I have no idea why they picked 90, which is an even number, and then 28, which is like 4 weeks. But I do know. Do you want to know why?
Explain.
Okay, so let's say it's a Wednesday when they file the NOD. Mm-hmm. Okay, then they want to file it 4 weeks later exactly. If they do it like 30 days, is it 28? And like it's a Thursday, it can end up on a Saturday. They can't do it on a Saturday, so they'd have to wait till Monday, right? So they basically do it 28 days, so it's 4 weeks. The only time it doesn't work is if the NOD falls on like a holiday, mm-hmm. right? Or because trustee sale could be on a holiday. So anyway, all right. So a notice of default people call it foreclosure, mm-hmm. but it's not really. The house is not available on the market. Because what things can save a house from being foreclosed?
Bringing the loan current.
Okay, that's one.
Selling the property.
Oh, selling the property.
Mm-hmm.
In the last year, I remember everyone was talking about the $4.2 million homes in default in the U.S. Mm-hmm. 4.2 million. It's less. It's like 1.6 million and dropping. Mm-hmm. It's like declining. The number of homes in default are declining in the U.S. Mm-hmm. Right? Other stuff, they can go to the bank and say, "Hey, can you work with me?
Right.
Can we work something out?"
Which is mostly what's been happening, right? Because the government last year said, "Hey, you need to work it out with borrowers." So banks have been working it out with borrowers, whether it's a payment plan, whether it's putting whatever payments haven't been made, putting them on the back end, doing some kind of refinance deal. There have been so many workout deals, it's crazy. Yeah. But that's the reason why the number of homes in default have been dropping, because they've worked something out with the lender, so the loan is no longer considered in default. Okay,
so what we're going to do is we're going to go to the Las Vegas area, mm-hmm. the default activity, is an indication, because we already said there's a 90-day period, then there's a 28-day period. So NODs happening like around this time mm-hmm. will tell us in 4 months if that's like a ton of properties coming on the market.
Right.
Okay? Now, in 2006, 7, 8, 9, mm-hmm. we were seeing 300 to 400 a day, mm-hmm. notice of defaults. And then we were getting like 60 to 80 notice of trustee sales mm-hmm. a day. And those were happening at the trustee sale, and some of them, most would go back to the bank and end up as a bank-owned home, and the rest would get purchased by investors and they would get flipped. But right. all of them ended up on the market.
Right. But remember, the reason why these homes would go back to the bank was not because people just threw their hands up and walked away. It was because homes just weren't selling. Okay.
Yeah.
So that was a big part of the problem. The other part of the problem was that people were upside down their homes. That meant that they owed more than the property was worth. That is not the case today, because remember, over the last couple of years, everybody's homes almost everybody's homes have gone up in value, no matter what the market. And so, because everybody's homes have gone up in value, most of the time, people have equity. So because they have equity, then that's something to work with, whether it's something for the bank to work with as far as refinancing the loan or putting the payments on the back end or something like that, or having the property be sold. That was not the case back then.
All right, so we're going to go right to the NOD for the 3 full months that we have data for Clark County: July, August, September. Mm-hmm. And what's interesting about this are 2 things. First of all, not every day there was a notice of default. There were some days where weren't any, so that's why you don't see zeros on here. And the other thing is, look at these little pathetic numbers. Remember, this is just the filing of NOD. This is a notice of default. This is not a foreclosure. this house is not coming on the market, and it's not being purchased at the trustee sale. This is just hey, this is your 90-day notice. You're late on your mortgage and all that. 400,000 residential units and this is residential in Clark County, and 3, 2, 1. Like, there's one day where there was 12. Like, wow, that was a big day. But then it was 6, and it's a little more in September than it was in August. But it's not like these numbers are not going to move the needle. Not going to move the needle.
No, not at all. And there are so few of them. And remember, these are just notices that people haven't made their payments. That doesn't mean that they are not going to get caught up or find some other way to ameliorate this and get the house out of default. And
they can put it on the market with an agent, right? Like us, we get the call. It happens.
Yep,
hey, I stopped making my payment. They posted this thing on my garage door. What do I do? We sell the house. How much equity do you have?
Right.
You're going to walk away with 20, 30 grand and you save your credit. Well, we can help you with that, right? Or you go to one of the iBuyers. Right. You just go on their website, put your stuff in. You probably won't make any money, or you make less, right? But it'll probably be a fast sale.
Right.
Cash. Third option is go find an investor. Just go find somebody who will just can close in 2 weeks.
Right.
Okay. All right. Now we're going to go to the next one. This is the after 90 days. You get the 28 days notice of trustee sale, and we have the same thing. Every day we don't have a trustee sale. And this is the notice of trustee sale. Now all these don't actually end up as a trustee sale. Look at this: 3, 2, 1, 1, 4, 1, 1. Like, this is 0, because literally most of these won't get to a trustee sale. And that, because what happens is when they hit the notice trustee sale, the investors start knocking on your door.
Right.
Yeah, they show up at your door and go, hey, I'm an investor. You're going to get foreclosed in 4 weeks. I can help you, and this is what I can do. And they do one of two things. They either buy your house cash, or they find out how far behind you are, and they do something called they buy it subject to.
Right.
You know a lot about this because you've done a ton of these.
Right. So the subject twos are pretty straightforward. This is where the buyer gives the seller some money to walk away. The buyer brings the loan current, then goes ahead and does whatever he needs to do to the house to sell it. They sell the house, the loan gets paid off, and the buyer gets to keep the rest of the proceeds. This is very common. It's been going on for ages. And I think this is probably a really good market for that, from the perspective of people who, for whatever reason, just want to get out quickly and maybe don't want to deal with an iBuyer, but are happier working with an investor for personal reasons.
The iBuyer will not bring the mortgage current.
No, the iBuyer will not.
They'll just and it is possible that they could not close. They could just say, hey, we due diligence changed our mind. Or whatever. So
generally on these subject twos, those tend to close because, remember, like I said at the beginning, one of the first things that happens is the buyer gives the seller some amount of money to walk away. So now the buyer is into it for some money. So they're very likely to go ahead and do some quick renovations, put it on the market, and get it sold because they want to go ahead and recoup their investment and make their profit.
The leading indicator 15 years ago when the market tanked all over the place, where the notice of defaults and trustees started skyrocketing. Right. It's not happening.
No. So something I want to point out is that when you see these 1, 2s, in a day or none, the reason that some of these are happening is because people die.
Yeah.
This is a thing it's a real thing, and it happens. So people die, and they either have a regular mortgage or a reverse mortgage, and either they don't have family or whatever's going on, or they didn't make proper arrangements.
Or family doesn't know.
Whatever's going on. Most of the time it's because family kind of doesn't know what to do, so they do nothing. So when they do nothing, then the bank has to do something. And that happens a lot. And I think that's what we're seeing with a lot of these onesies and twosies, is that sort of thing. It's not necessarily a hardship, but I think it's because somebody's passed away and the family doesn't know what to do and they do nothing. And then the bank goes ahead and forecloses on the property.
Economically, something else important is happening. You probably notice this when you watch the news or if you go to a restaurant or whatever. Mm-hmm. There's a lot of job openings and people are working. The other thing is wages are starting to go up because of labor scarcity. But remember that these mortgage payments tend to be fixed. So what happens is the mortgage payments that are fixed are actually cheaper as time goes on because the borrowers get a new job or get a different job or get a pay raise and they make a little more money. So they actually gets it easier for them to make the payment, which is why home prices are going up, because people are making more money. They're willing to pay more for a house.
Right.
So so it doesn't really look like, when you look at all these economic factors, it really doesn't look like the thing that people are predicting. If you watch all the videos, and you can go back to the video I made at the beginning of the year where I said the housing market would not crash in 2021, and I nailed it. Like I nailed it. Totally nailed it. Said it wouldn't crash. Bunch of people out there saying it was going to crash, and this is why. And they were only looking at one thing. They were looking at the people not working because of COVID. And they said, look, all these homes are going to hit the market, and it's going to crash the market. But it didn't happen.
No.
And now the thing that we're finding is that the reason it's not happening is because people that really need to sell are just selling, and they have equity and they can sell it. They couldn't do that, like you said, 15 years ago, because the prices declined and they had overpaid for the house, 100% mortgage. And now the house is worth less. Even if it's worth the same amount of money, they can't sell because they can't pay closing fees.
Right.
Usually maybe 8% or whatever of the sale price.
Right, and to something that we've kind of addressed before, we're not expecting the market to do anything dramatic. We are expecting the market to kind of keep increasing at a reasonable rate. Part of it is inflation, as Todd said, people's wages are rising and that sort of thing. The other part, I think, is something that I don't know that anybody else has talked about, but that something that kind of has occurred to me lately is, we've all been hearing about all these supply chain issues and that sort of thing that are going to leave the store shelves less than abundant for the holidays. And I think that may actually work in the favor of home prices, because if we are all spending not quite as much at the holidays, then we all have a little bit of excess cash maybe, and that excess cash may get put toward a home come the new year.
Yeah, a lot of people don't like to hang on to cash. So if they can't go to the store and buy something, they're probably going to make their, go out and buy a house or something. I don't know. But anyway, okay, so this is the last slide we're going to show you. Now, this is a market condition report. It is September, but it's for the whole month of September for 2021.
Right, so keep in mind that the data that we're presenting to you is the most current data that is available. We're not purposely using September as opposed to October. We're using the most current data available.
Yeah, October just ended. It takes a while for all this data to be put together, because remember, the closing that happens on October 31st, for example, or 30th, doesn't instantly it takes a while for it to start showing up, in the MLS or in tax records. So it takes a few weeks, like 3 weeks, for it to be everyone to be able to look back and see it. So no one actually pulls any data for the previous month until way into the next month. So there's some really cool things in here. And what we're going to do is we're going to leave this up while we talk, so you can kind of just look at this. But what's interesting is if you look at the monthly price changes of sale prices, the middle of the beginning of spring of 2021, you have 4 months in a row where home prices went up by 10 grand. 99.50, 10,050, 10,000 even. And that's weird. That would go exactly from 360 to 370. Because remember, these are pretty accurate numbers. And that's a median. So it's possible you get 50 houses that all sell for 360,000. So it just works out that if one of those is the median, that the median is exactly 360. So it's not made up data. This is actual data. Okay, that's why it's not average, because if it was average, it would be $413,275, right? It would be exact numbers. If you look all the way on the bottom right, this is what we just went over, the notice of defaults and notice of sales. You can see that about half of what was filed, 118, ended up in a notice of sale. And then we know that about half of those end up at the trustee sale. 30, which is roughly one a day, 2 on some days. sometimes these get bought. Sometimes they don't get bought because they just go back to the purchaser for whatever reason. But the ones that are getting bought, even if they're getting flipped and put in the MLS, they will have zero effect on home prices.
Right.
None. Some of these do get purchased and turned into rentals. There are hedge funds that still buy at the trustee sale strictly to hold the inventory and rent it. So, and the other cool thing on here on the bottom left is the transaction type. You can see that most of the market, probably 80% of that is resale homes. And then you have that blue wedge, which is the new builds. And then those little bitty slivers are REO, which is bank-owned homes. And then short sales and trustee deeds, which are literally nothing. This is a super healthy. If you weren't paying attention and you just saw this, you'd go, wow, this is a really healthy real estate market. Right. And I don't mean inflated healthy. I mean, it's pretty healthy. Like, it's pretty solid. Right.
You know, this is the picture of everybody's kind of chugging it right along. People are making mortgage payments. The economy's pretty good.
Bubble watch prediction. Home prices will increase between now and this time in 2022. I think it's a pretty safe prediction.
Pretty safe, yes.
We will know 6 months ahead of time when we start seeing these notice of defaults go to 100 a day. Well, if that happens, but right now there's nothing that would make that happen.
Well, and we'll know even before that because we will see inventory climbing dramatically, and I don't expect that.
Yeah, inventory will have to climb to above probably 15,000 before it starts to get where, and remember this update here is just for Clark County, Las Vegas, Nevada. Other things can happen in different parts of the country. But I don't predict anything bad is going to happen in 2022. I'm bullish on 2022. I get people all the time. There'll be people comment on the video, probably already signed off. They didn't watch it. They'll watch like a minute or two and then they'll make a comment and leave. Well, you're just real estate agents and you guys always say the prices are going up. But we don't always say that. No, we didn't say that in 2006, 7, 8. We were like, no, prices are going down. And our investors, we were saying, hey, if you're going to buy, you have to buy the trustee sale, because the MLS prices were, if you're going to buy it, you buy it and hold it. Don't try to flip it because you won't make any money. It's really hard to do. And if the bank-owned homes do come back, that's good for us too because that's what we list the bank-owned home. We list the homes for the bank.
That's right.
So it would be fine for us either way. The other thing is real estate agents in general don't care because whether prices go up or down, people sell. And real estate agents make money on the sale, not on the. It's like stockbrokers. They make money every time you buy or sell a stock, not just when they go up because they don't hold the stocks. They're, so.
We make money when houses change hands, and it doesn't matter to us whether you're buying, you're selling, the market's up or down. We just make money every time a property changes hands.
Yeah, the worst thing for the real estate market, for real estate agents actually, is to have a market where nobody's buying or selling at all. That's like terrible because nobody can make any money. That's how literally all the money is made, right? So even in a market where there's a lot of sales, agents made a killing from 06 to 11. A lot of agents did, right? Even though, and I used to get people say all the time, you probably went out of business. Like, no, it was great. Their homes were selling like crazy. The prices were going down. They were selling like crazy though. They were just flying off the market. Okay, so that's the update we want to do. It's a bubble watch. Bubble's not going to pop, I don't believe.
Nope.
Not going to pop. If you liked the video, please subscribe to the channel, share it, hit the notification bell, and leave us a comment.
Absolutely. We love your comments. We love engaging with you. So leave us a comment, and we'll see you on the next video. Bye.
Bye.